Hi, this is Steve Spangenberg coming to you today to speak to you about common tax myths. This is for USA taxes only. And just a little bit about myself really quickly. I've been doing this for 44 years. I've been preparing taxes all that time for basically home-based business people. My first client was my mom's Avon lady. And I do everything multi-level marketing, home-based businesses, bloggers, internet marketers, anybody that has a small business, mostly home-based business. And that people that file a Schedule C, which looks like this. That's what a Schedule C looks like. And some people have gone the route where they become an LLC or they become subchapter S corporation. That's in another video. So this series of videos that I'm putting out right now are just about common tax myths that people say. Now, I've heard a lot. Over 44 years, I've heard a lot of these things. You know, people say, call me up and say, oh, I heard my friend say this, or I heard my uncle say this, or whatever. And, you know, we just have a discussion. I don't get mad. I just, send people to the rules. And we go from there. So today's myth is the $400 myth. Now, I hear a lot of this from people that are in like companies like Mary Kay or Young Living. They say, well, you know, I didn't make over $400, so I don't have to file taxes. That's the myth. I didn't make over $400, so I don't have to file taxes. This is not true. Now, I'm going to debunk it, and then I'll show you the benefit of claiming that. All right? So where they're getting that from is from their friends. I ask people, what do you mean by $400? I don't know. Somebody just told me. So if you go back the chain of people, saying, somebody has read this form here. It's called the self-employment tax. So when you're a Schedule C, when you say, let's just pretend that we go into Mary Kay and we make $399. Say we make $399. Now, you would put $399 here on your Schedule C as income. All right? Now, what happens is that where the 400 comes in is down here. In self-employment tax, this is your $399. We're going to skip over here to the Form SE, self-employment tax. We're going to go down here and we're going to see that this person pays zero in self-employment tax. Now, self-employment tax is Social Security. So if you're 100% self-employed like myself, I pay my own Social Security on my earnings. If you're an employee of somebody, they pay half your Social Security and you chip in for the other half. When you're self-employed, you pay both halves. Now, here is where these people are getting the $400 from. And if we're going to back up here, right here. Multiply line 3, which is your earnings, by 92.35%. If less than $400, you do not owe self-employment tax. There's the magic $400. Now, this does not mean that you don't file this $399. It just means that you don't pay self-employment tax. If that's your only income, you have no expenses, it just means you don't have to pay, you don't pay self-employment tax. But if you look up here, federal owed, you owe $36 on that. Now, what I did was I put in Joe Taxpayer here. just for example purposes, I put in here Joe taxpayer, Jane taxpayer, and baby taxpayer. They make $80,000 in their jobs. And before the $399, they owed nothing. They paid, about $4,000 in taxes, and I made it zero out. So when I add the $399, they owe $36 in tax on that, plus any state and local tax that they might owe on that amount. Now, you may say to yourself, well, the IRS will never find out about this $399, but if they did somehow find out about the $399, they'll put it on your tax return and make you pay the $36. Chances of that happening are slim to none, but you know what? Some people just say, well, I didn't make it over that. I'm not going to put it on my tax return. That's their prerogative. But I want to show you why you should put it on your tax return. And here we go. Now, this is what I do. Now, a lot of people say, oh, Steve, you've been doing taxes for 44 years, show me some proof of, how good you are. Well, here you go. Now, I went back to, I go back and I look at people's prior year tax returns, and I do what's called amended returns. And I thank God for people out there that don't know what they're doing with a home-based business, because it's created a lot of business for me over the years. Tons of business. Because for example, I can't show you the upper part of this. This is a Form 1040X, as you can see up here on the left. That's an amended return. So what I did was these people came to me and said, they don't feel like they're getting a fair shot with their accountant, and they want somebody to look over their last year's return. So I said, fantastic, give me your return. They had a home-based business. They were in an MLM. So what I did was I looked at it and I said, what about this? What about this? What about this? The main things in this, they didn't write off any mileage. They didn't write off their cell phone. They didn't write off their internet. Okay? Now, all that they didn't write off amounted to about $3,300 right here where my little mouse is. $3,323 in deductions that they missed. And for that, they got $731 back cash. All right, that's just that's a small example of a person that didn't take all the deductions they were entitled to because their preparer didn't know what they were doing. And I don't fault those people. I mean, when I was in college, I wasn't taught to do this. I learned this myself. I went, like I said, when I was 14 years old. It was my mom's Avon lady. It was my first client, and I learned on my own about the deductions for home-based businesses. They didn't teach any of this in school. They just taught you how to do a 1040, and that's it. They didn't teach you how to do a business or anything like that. So I learned this on my own and researched it and found out the deductions that were available to home-based business people. So right there, $731. Now, let's go back to Joe taxpayer. Now, I'm going to show you the benefit of why you should report this $399 besides the ethical part of it, where you made $399. You should report it on your tax return. I'm telling you for true. This is a philosophy that I've lived by with the IRS since I've been starting to do this for 44 years. I said, report every penny of your income. Report every penny of what you make. And then be aggressive on your expenses. That means go right up to everything that you deserve on your deductions, and you'll be all right. Because as soon as you don't report income to the IRS, you've lied, and they'll just bash you. Okay? Guaranteed. Now let's go over here. I'm going to go back to this Schedule C. Now let's pretend this person came to me and said, Steve, I only made $399. I'm just going to pop in here that they're in Mary Kay. Okay. Actually, I always put in retail sales, cosmetics. All right. Now, let's just say they made $399 in their first year in business. All right. Now, I know from experience, because I've done many thousands of Mary Kay tax returns. I'm going to do this for a full year. They started on January 1st. And they've only made $399. Not unusual. Not unusual for people in Mary Kay. Some make more, some make less. Now, what I'm going to do is I'm going to go down, I'm going to walk through this tax return, and I'm going to show you what they can deduct. Number one, let's say they're a car. Now, if they follow what I preach, which they wouldn't have known what I preached because they didn't know me. Let's just say, there we are, 010119, we're in service. Let's just say that they only drove, say, 2,000 miles for business. All right, we'll pop that in there, 2,000 miles for business. And they own their car, and we're going to use the standard mileage rate. Okay? So now, as you can see up here where it says federal refund, now they started at 0. They added their income, it went to 36. Now they're at $96 they're getting back from their business. Okay? So now they're at a $96 refund. Now we're going to go back. That's only with 2,000 business miles. Now I know a lot of people drive more than 2,000 miles for their business, especially for Mary Kay. They go to meetings, they go to the store, they go to clients' houses, they do parties, etc., etc., etc. Okay? So now we're going to go down here, and office expense. They have a small home office, they out of. Say they spend $300 a year in paper and ink and just general office stuff. Maybe they bought a new desk, etc., etc. So let's just say $300. All right. Now in Mary Kay, they have something called Section 2, which are supplies, that they can get samples, etc., etc. Say they spend, $200 in that, which is not unreasonable. And let's say they went to the convention, so they have some travel there. They spent some money on a hotel, taxi, things like that. Say they spent $400, that'd be $500 on that. Deductible meals. They had some meals with people. They conducted business. They didn't talk about business. They conducted business. That's a whole very. It's not a gray area. It's just an area that you have to be careful of, that you just don't talk about business doesn't constitute a deduction, but you have to have a business intent. Let's just say they spent $150 in meals. And I'll tell you what, that's really, really slim for Mary Kay, because I have a lot of tax returns in Mary Kay that they spend a lot more money than that. Now, we come down here. We're going to put these other expenses. Number one, they have a cell phone. Most people spend about $100 a month on their cell phone. Seems to be about the norm. So we have a $1,200 deduction for your cell phone. We have the internet. Okay. Maybe that's $80 a month. $960 for the internet. Okay. Then you have the inventory that you buy. Now, it's not really inventory. You buy a starter kit with Mary Kay. Most women start out with a certain amount of product that they can go out and sell, because they've obviously sold $399 worth of product. Now, right up here, this form asks you a question. What's your accounting method? Cash. Cash accounting method means what you spend in the year is an expense, and what you bring in that year is income. So there's no inventory involved unless you're on the accrual method, which is silly to be on that method. You'd be on the cash method. So let's see. We have our starter kit. Now, my ex-wife and I were in Mary Kay. I was in Mary Kay with her, and we started out with $3,000 worth of product. Okay? But let's just be conservative and say that this person started out with $1,500 worth of product. All right? It's reasonable. That's reasonable for Mary Kay. Okay? Other businesses are less. Some businesses are more. So right there, this is just a bare bones. In Mary Kay or in any other MLM, there's merchant fees, there's supplies, there's web hosting fees, all kind of different things that you can add up. But we're just sticking with the bare bones right here. And like I said, a lot more mileage. Now let's have a look at this. Now they went from $399 worth of income. They're showing a $5,496 loss. This doesn't even count the home office. We can talk about the home office and all day long, but I'm just going to keep it bare bones for this video. That's the home office, and all that's just the icing on the cake. But right here, all investment is at risk. Let's go back to the top of their form. You can see that this is a married couple with one child, made $80,000 in wages, had a loss of $54,000, so that brought their income down to $74,500. And from that business, they're going to get $660 back in a cash refund. $660. Okay, so you want to look at the business before. So there's their income, their loss is $54.96. Let's just put this income in here, $54.96. So it zeroes out. So you can see up here, federal refund 0. But when we put this business in, they get a $660 refund. That, my friends, is the benefit of declaring that income on your tax return. Now, if they were working it as a hobby, that's a whole different story. But I'm assuming that this person went in business to make money. They have an intent to make profit. They work their business on a consistent basis, and they keep good records. Now, that is all an assumption that the IRS says, yes, you are in business if you can prove those three things. $660. So there, if they would have gone and said, oh, well, I don't want to report my $399 because my brother-in-law said that you don't have to pay tax on that. Well, that was wrong, and they would have foregone $660. Now, I'm sure $660 to some people isn't much money, but to a lot of people, $660 can, get them out of a tight bind, or, if their car breaks down or the refrigerator goes. So what I'm going to tell you is this, to learn how to do this. All right. And in the link, there's a link in the description to my course, which tells you exactly every deduction that's available to a home-based business. I wrote that myself. I wrote a book. It was called The Income Tax Reduction Guide. I wrote that and sold thousands and thousands of copies of that book. It was a $29-page book. I used to put it in 3-ring binders and do seminars and sell them, and sold thousands and thousands of books. And so now I've turned that all into a digital form. And let me see if I can get to that place. tell you, sometimes computers are fun. There you are. It's thunderstorming right now here, so who knows what the internet will be like, but it'll come up. You can listen to my voice. Link in the description will take you down to this course right here. It says do your own taxes. The home-based business includes the business tax reduction guide. It's really raining now. And right here, do your own taxes course description. This course is generic plus supplements for the following business. There's, if you're in any of these businesses, there's supplements in there. It talks a little bit about your own. There's the income tax reduction guide, how to be compliant with the IRS, tax forms. This goes over how to do your own taxes. If you don't want anybody to do your taxes, you can do your own taxes. These are all videos right here. These are all videos on how to do every form that you just saw there. Other business tools. There's Young Living stuff. There's individual company supplements, sponsoring tools. All right. That's cheap. See that? That person right there could have bought this for $147 and saved $660 the first year. All right, so they're already got their money back for that. Plus they have this forever, which means they're saving money every single year. Now, that's where the link in the description takes you. And I hope that you enjoyed this video and know that the tax myth of if you make under $400, you don't have to put it on your income tax return is false. This is Steve Spangenberg. I hope you make it a profitable day.